Hello, everyone, and welcome out to your midweek currency room. This is Sankit here, and as always, we'll be going through the markets and taking a look at how things are moving along so far, and talk about our upcoming outlook for the remaining part of this week. So, as always, we're just gonna go through the markets, take a look at news, but then take a look at the currency baskets, and then talk about possible opportunities ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
And here we are with the markets, and we are seeing, the slow conditions. So one of the things that we talk about is seasonality patterns, and we are in this peak summer trading environment. As we go into the Labor Day, we start to see things pick up, and of course, there's always exceptions. Like last year, August was one of the busiest months because we had a lot of movement last August. Around the unwind of that carry trade, and we had some massive moves in the Japanese yen and in the broader markets. This time around, not so much. So, not a whole lot has developed in the markets. We are seeing market continues to push higher, and that just continues to be the case here. Now, the dollar and the yields are actually lower after the CPI report, and I'm actually going to show you quickly here. Let's actually take a look at the yields, the expectation. So as you know, market kind of runs on expectations, and that's really where we start to see some movements. And I am surprised to see that markets are now expecting, and this is a Fed rate watch tool. And you can see that in September, the next meeting, they're expecting a 99.9% chance that there's going to be a rate cut. You go into the October, they're actually expecting also a 70% chance for a rate cut. And now, December 10th, they're expecting another chance for a rate cut at 60% there. So you can see that market expectation is getting a bit aggressive for a rate cut. So I think this is where we'll probably see some bigger moves happen because, as we get this reaction from traders, markets are all-time highs, economy looking good, numbers are okay, and here's the expectation that markets wants to do a 3 rate cuts. So this is where I think maybe markets are getting ahead of itself. But as always, we want to trade the markets in front of us. We don't want to trade the markets that we want to be. We want to trade the market in front of us. But at the same time, I think this is a story that we've seen this play out over and over, where markets get ahead of itself. And we start to see some, market tilt the one way, and then suddenly data comes out and market sort of reverses. So we'll see what happens, but that's really where we are. The yields and the dollar are getting pushed lower here. Overall, quiet week in the markets, and most importantly, small percentage moves. I always talk about the ranges that you're seeing, and right now we're seeing the smallest range in a lot of currencies, and that's something you got to factor in as you try to strategize and try to set expectation, or even take a look at the time frame, and is it worth trading that time frame, or should I go higher time frame? But that's just really what we are, and I expect maybe continuation of this for the next couple of weeks, unless something happens in the markets, which is sort of unlikely at this point. But we'll start to see a pickup in activity as we get towards the end of the month and into the Labor Day weekend. Now, here we are with the percentage change, and this is what I was talking about. Look at the percentage change. The biggest mover today or this week is 0.61%. On the lower end, we are seeing the CAD and the dollar down, 0.47%. So on the maximum end, you're getting pound dollar or pound CAD, more than around 1%. And then here's the same thing with the pound dollar. Really, the 1% move is the biggest move that we've seen so far in this pairings. But outside of that, you can see that small moves. Swiss franc, euro, even though euro looks strong, small percentage moves. The Aussie and Kiwi kind of look small. Yen, look at that, flat over here. So you got to factor in that if you're trying to extrapolate a bigger percentage change, then you have to trade the currencies that's giving you the biggest percentage move. And right now, again, that's dollar has been definitely one of those currencies that's giving bigger percentage moves. And we have definitely seen this, kind of things go back and forth between the dollar and the yen. That's where we're getting the biggest percentage move. But now, when you start pairing things like Aussie Kiwi, you can see they're kind of doing the exact same thing. Um, we take a look at between the euro and the pound. They kind of look very similar. Same thing with the euro and Swiss franc. So overall, really, the movement has been in some of these handful of currencies. So you got to factor that in. Pound, we talked about pound last week. It looked the best after that rate cut with the hawkish stance. So pound continues to go strengthen on that, and I think we'll probably see a continuation of that trend for the coming week. Now here we are in the broader markets. As you can see, broader market S&P up 1%, World Stock Index up 1.21%, and crypto markets are definitely on fire here. With Ethereum almost doubling up in or 50% gain, I think almost a month. I mean, this is a massive move. Some big short coverings happening too, but overall, that's really where the action has been. Gold is down and oil is down, so not a whole lot happening there. And as you can see in the crypto front, we are seeing Ethereum really is the one that really moving the most here. Bitcoin Cash up, we can see Litecoin up, but if you've got from the percentage perspective, Ethereum is the one that is actually doing the best. You can see that the Bitcoin itself, it's slow, it's higher, but it's kind of stalled around that 118 to 120K level. So this is where, we're getting these outsized moves, which sometimes precedes with some bigger outsized pullback as well. So just realize that, the faster it goes up, it can also be, subjected to some bigger corrections as well. So it's very important where you get in the price cycle. And some of these cryptos, I mean, the problem is that with cryptos, by the time that the mainstream really gets into it, the biggest moves already happen. And then when everybody gets in, and then we see a massive pullback here. So just watch out for these cryptos here. But as far as the momentum goes, that's where the momentum is. Now, here we are with the broader markets. Let's take a look at where we are. The outlook remains the same, +3. I mean, here's the chart here. And I'm actually surprised that, after market topping out right here, we actually gone right above it. So why we take a look at broader markets? I mean, that just tells us what the risk sentiment is. And right now, as you can see, markets are in a happy mood, lower volatility across the board. I think we are down to the lowest level of volatility for the year. So that's a big change there. Now, you can see we're getting some pullbacks right here. Prior resistance is now support. So nothing too extraordinary. I mean, you have some pullbacks in between, but you can see that overall, this is a low volatility period, but with some nice little direction here. But the way things are moving is definitely on a lower end. And where we are right now, I think market's likely to stay strong until it really, the biggest thing would be if it falls back below that support level, which then will be back within that range there. Now, when we talk about news events and, with this lower volatility period, what I'm looking for is, hey, should we be active around news events because that's where you're getting the biggest percentage moves. So when we take a look at some of the events that happened so far, Aussie, we already had the Aussie. Let's go back to the screen here. We already had an Aussie report. They did lower rates and they did, had a bit of a dovish outlook. So I still like Aussie to the downside, but you can see Aussie is also sensitive to the market sentiment. So if the market stay positive, it's kind of holding the Aussie up as well. But if the market turns lower, Aussie still have some relative weakness underneath there. Now, yesterday we had the US CPI, and this is the number that, I was really paying close attention to because, since the jobs report came out on August the 1st, that's really where the expectation has gone up for markets to cut rates because of that big, revised correction and not a good jobs report. Now, we still have quite a bit of data to go through, especially the next jobs report. And I think this is where the market's kind of likely to stay a while because, we just looked at the expectation. Markets are so leaning forward towards a rate cut. What if the data start to look a little bit better? Now, does that mean that the FOMC is going to not cut rates? Well, I think that's really where you're getting the tug and the pull in the markets. And that's something you got to keep a close eye on. So economic data right now out of the US is very important. Now, taking a look at this data, I mean, overall, it was a mixed report because the core did go up, but the year over year number did go down. So I think it doesn't really tell us much. Now, when we go into tonight, we have the Aussie employment report. So they are looking for actually a better than expected jobs report. And so if you're trading the Aussie, I think tonight this is the one I'd be paying a close attention to. And then going into tomorrow, we have the pound GDP. I mean, they're looking for a better number. Pound's already looking good, so I think pound likely to stay strong. The next important number I'm looking for is the PPI number that's coming out tomorrow. You can see that we're expecting a bigger jump in this PPI number, 0.2 on both. So I think this is where, if we saw the dollar did pull back, let's say if this comes out, a lot stronger, then we could see the dollar sort of reverse some of the gains here. So I think dollar is really, kind of moving back and forth. Doesn't really have a strong trend. It's not the best long. It's not the best short. But when it comes to velocity, there's definitely movements that are lasting, maybe a couple of days to even a week before it really turns around. So just keep in mind what kind of price action that you're getting in the dollar, which is not on the bullish end. It's not on the bearish end. It's kind of in the middle there. So that's really what we have for tomorrow. And then on Friday, we have the retail sales out of the US. And I think this retail sales number or any data out of the US, I think you want to pay a close attention to. And I just mentioned that you got to take a look at what the bonds are doing, take a look at what the expectations are doing, because I think based on that, we will see an impact on the dollar. So that's really what we have going on, keeping in mind all these events in a low volatility environment. Now, here we are with the velocity score, and it's pretty clear where the movements are. I mean, movements are in the dollar, in the pound. Movements are, let's go back here. Movements are in the pound. Movements are in the euro, and movements are in the Swiss franc. Like European currencies are definitely doing better. We have the Aussie and Kiwi, which is, I would say, mostly sideways. Yen is catching a bit of a rally here as the dollar pulled back, and CAD actually looks pretty weak as well. So let's just go into and take a look at possible trades, take a look at some setups. And this is where if you have any pairings, anything you're looking at, just type in the chat box and we'll take a look at them as we go.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video and then schedule an interview with one of our traders. Are you our next trader?
All right, so let's just jump into our trading view here and see how things are. So let's just start with the first. I always like to start with the broader markets. So the broader markets, it looks like it's pulling back a little bit here. I mean, in the last, you can see, since this morning, we are seeing some bearishness over here. So this is the prior resistance and now the support. As long as the price stays above it, I think we'll probably see a continuation. If it does fall below it, then you are now looking at the bottom end of the range here. But overall, market remains bullish. There's not a whole lot of volatility. So to measure the volatility, I mean, in broader markets, it's easy to do that because you can just take a look at VIX and see where the volatility are. I mean, you can see that we are sitting at the lowest level of the volatility, going back to even last year. I mean, this is really where we are. And this is the reason why you're not really getting a lot of action. You're not getting big moves in the markets where things are moving so aggressively, where, you get in and you move your stop pretty quickly. And, those trades are moving a lot faster. I mean, markets are moving at a much slower pace. And it's just not the U.S. market phenomenon. I mean, markets have volatility is kind of low across the board. For the bond market, you can actually take a look at the yield, the move index, which kind of factors in what the bond market is telling us. As you can see that we are hitting new lows going back to almost 2022. So markets are very complacent here. Not a whole lot of fear, and that's why we're not really seeing a lot of movements. Now, in currency markets, currencies are definitely sensitive to a lot of these things. Now, I'm just going to take a look at the bond yields here first as well, and you can see that the bond yields are moving lower. Overall, this moves have not gone anywhere, but then now we're getting this expectation that market wants to, rate cuts in the coming months. I mean, we'll see what happens, but for now, you can see where the movements have been. Now, let's just start with the dollar because that's really where a lot of the movement has been, and I think this is one of the currencies that might leave you frustrated, especially if you're trying to play it, on longer term trend, thinking, I think this is the dollar is going to bottom out here and it's just going to break out. I mean, you can see that a couple of times it did look like it wanted to turn around, and every time it just gets above that level, it gets pushed down. So, how do you trade this? Well, this is where you have to trade based on the strength and the weakness that you're getting in that trend score. This is not a this is not a strong trend score, and this is not a weak trend score. This is mostly moving between the ranges, and this is the best way to trade the dollar is just to kind of see when the momentum is, and the momentum fades, then get out. You can see that there has been periods where 4 or 5 days of push lower, and then a 4 or 5 days of push higher, and back and forth and so forth. So that's the kind of price action you're getting. Now, you get this price action all across the board. The price action will look different. I mean, take a look at how things were looking last year. Last year, things were sideways for the most part. You can see in the summer, and then pretty much in August, start to move lower. That kind of continue to move lower all the way till October. And you can see that this was very directional. So you want to play it on the short side. And then we got a big move up. And that's what we want to play long side. See, that makes it a little bit easier to kind of spot the trend and just follow the trend. Now, when you get into the sideways, and I think this is what we are getting so far this year, is we're getting a lot of ranges. Here's the dollar on the range. Let's take a look at the Aussie. That's a big range. Take a look at the Kiwi. Now, that's a big range. So just realize that that's really what you are seeing. And that's why if you're kind of looking at back testing the data, your strategies might perform very differently last year or a year before that, because again, all depends on what the market environment is. So this is more of what I would call a range bound condition, and this is why I think you need to trade accordingly to the market condition. Now, when we take a look at currencies, again, dollar, like I said, is sideways. I don't really love it as a long, don't love it as a short, but I think it's a good trade around these events because that's where, we see some pickup in activity. Where over here, you can see we had a massive move up. We got the U.S. jobs report pretty much down since then. So a lot of back and forth. So I think you want to trade it whenever the momentum is there, but not want to be committed to that direction because there's just no direction. On the Japanese yen, and I think we are seeing a lot of back and forth between the dollar and the yen. But if we just follow this this trend here in the yen, we have seen periods where, I mean, look at that. It's a beautiful sort of a downtrend over there. So this was a great currency on a direction wise. Now I feel like the yen has also gone sideways here on this range here. So again, setting up expectations and adjusting them is an important thing. Now let's see what else is trending. We had the Swiss franc that was trending higher, but now does it look like it's trending lower? It does look like it. The range is still very small. You can see that the percentage change is not huge. So don't expect even though you're seeing a little downtrend, don't expect some big returns because you're not really getting that big percentage change. Overall, Swiss franc has been an uptrend, but in the shorter term, it's in a downtrend, but it's not a very strong price action. You pull back for 3 days, you went up for 2 days. Then you pull back for a few days, and now you're getting up for 2 days. So that's just what we are expecting here. The euro on a chart basis looks the best to me. I mean, look at this one right up against the resistance. Now the question is that if everything is going sideways, now is this a time where should I look for a breakout? As you can see that in this kind of price action, we have not successfully broken above the resistance. So as we are up against the resistance, I'm a little bit more wary of a breakout. I would want to see confirmation, especially in conditions like this. I want to see more of a confirmation that is it going to break out higher or lower. But overall, you can see this thing is holding steady, but not a whole lot of volatility to the downside. It's mostly slowly steadily moving higher. And same thing's happening with pound, but you can see pound is much better currency for the last few days. And we pointed this out last week with that jobs with the rate cut and then the hawkish stance. You can see that after that, things have been moving consistently higher. So all the pound currency pairs are looking pretty good. And we'll take a look at them as we go. When we take a look at pound currency basket, and this is the question I think I had earlier today, pound is almost getting towards the resistance. So if you take a look at this run, you realize, hey, if I miss this move, I'm really getting on the tail end of that move. Well, that's true. I mean, you're getting towards, the big moves already happened. Now, the question is that, do we expect for this to continue moving higher? Well, I think until we really start to see signs of failure, you can see what the signs of failure looks like, where we start to get these upper shadows. You're getting these shadows where you can see the prices did go up but didn't hold. They went up, didn't hold. So far, the momentum is there, but I think at this point, when we get to the resistance level, that's where you have to kind of factor in, is the price action, looking a lot better, or do we start to stall there? But for now, if I have to take a look at 4-hour chart, that's really where the momentum is. Beautiful setups here. You can see that even on a 4-hour chart, how slower things are. It took almost 4 days to break out. And then now here we are, it took another 3 days to break out. So yeah, things are just moving slowly. So if you do enter it on, let's say, a 4-hour chart, just expect that you want to be in that currency pair for a little longer, and it might not do anything for some period of time. Now, if your strategy says, I want to get in and get out, just realize that in that scenario, you might even have to go lower time frame for velocity. But overall, if you are entering a trade on a 4-hour chart, from a technical standpoint, you can see this thing is just, it's moving nicely as you look at it. But at the same time, what are we entering it too late? Or, what's the setup here? So you can see that the best setup really is not on the breakout. It actually is on a pullback. And right here, there was a pullback. In this situation, it was more of a base. But as the thing have rallied here, this is where the question is it going to stall? I actually do like to get into these trends on pullbacks. Now, CAD is the one that actually moved very nicely in the last, is a 4-hour chart. You can see this thing is showing a very negative velocity. But now keeping in mind that in the grand scheme of things, we're just getting on the lower end of that range. So as much as I like when I look at a 4-hour chart, but this is why we do a top-down analysis. We start from a higher time frame, and you just have to kind of take it with a grain of salt that we're just getting at the bottom end of the range. So just keep that in mind. And I think this is one of the mistakes a lot of traders make is trading the wrong strategy at the wrong time. Now, I love trading breakouts when the direction is there, but when you see these kind of price action, I get a little wary of these breakouts because things look more predictable. They have been bouncing back and forth when we look at the chart. So that's where where you want to get in for a breakout. That's really where things start to reverse. But that's just the nature of sideways markets. Now here we are with the Aussie. Same thing. As much as you can say I would like the Aussie. I don't love the price action. Look at the wicks on this. So this is where it does. If you're trying to go short or you're trying to go long, you're probably getting stopped on both directions. So not a great price action here. You want to see what a good price action looks like. Take a look at last year. This is the price action last summer, June, July, August. We had a massive move in August, you can see. But even then, over here, you can see it's just gradually moving higher. Now, that's a good price action you want to get into. This is where, it's more like rolling the dice. Like I have no idea which way it's gonna go. And same thing with the Kiwi. Kiwi is getting some pockets of strength and weakness, but in a grand scheme of things, it's range bound. So as we go through all the charts, we are realizing that more things are sideways than you want it to be. That's just where we are now. Market movements don't last forever. We are in this slow period where I think we probably see more of this for the rest of the month. But as we break out above it, that's where you want to play directional. But that doesn't mean that you can't be or make good trades in this environment. You just have to do the right thing at the right time. And this is not the environment where you want to leg in. That's just not the market environment. This is not the market environment where, like I said, you want to buy breakouts. This is not the market environment where you make a long-term trend and you are looking for a reversion to the mean strategy. None of those things are going to work. The only thing that's going to work in this market environment is trading the ranges, and between the ranges you can get some sizable move, but that's pretty much it. Now I think that's just really how it's going to be until we really break out one way or the other, and I think we'll probably see more clarity going into the after the Labor Day. I think this is a good year that's falling into the seasonality pattern of low volatility, but when things are moving, I think dollar, as you can see, it's range bound, moving back and forth. You can take advantage of these movements. Same thing with the yen. I think yen has slowed down quite a bit, is going sideways. But yeah, a couple of days of trends are the max that you're getting here. So let me go through some of the questions here, because I think some of the pairs that I had pound cat in the list here. That's the one pair I was looking at as well. So let's just say look at the pound cat. So yeah, so the great question, it's heading to the resistance. Am I too late? Now, and I think this is one of the questions we had in the Discord group as well, that, hey, I'm just being too cautious around these levels. It's totally fine to be cautious around these levels. I absolutely like to be cautious because, when things are moving sideways, you notice that these ranges are more predictable. Like these resistance levels and support levels actually do work. So where we are right now in this price cycle, yeah, I think you're kind of getting at the tail end of it. You're not getting in the front end of it. Front end of it was like for example, like last week, like when the rate cut happened with the hawkish stance, and we just switched our outlook. Like that was a time to get bullish in the pound. Now, if you're trying to get bullish to pound here, yes, I think I'll be a little concerned for that. So this is where, from a chart perspective, risk to reward ratio doesn't look good. And a lot of times I have trades that I pass it on, not because they don't look good. It's just because I don't like them from a reward to risk ratio or perspective. So that's why I always say it's not always a perfect looking setup. Sometimes it's all about, you're finding a good reward to risk ratio trade, where it's worthwhile for me to be entering a trade. Otherwise, I'll rather sit in cash. So at this point, this thing is not rolling over yet. So the candlesticks does a really good job to tell you like what the price action is. So far, as you can see that it is still running. But look at how close we are to the resistance level. So I don't love that risk to reward here. Now, if the price does stall from here, where we start to get this upper shadow, now that's when you know that this price is going to go so likely stall over there. So from a 4-hour chart perspective, look at that. Like this was a nice setup here, which almost took 4 or 5 days to get out of it. But at this point, I don't love the entry here. So I think I'll rather wait or trade something else, that would give me a better opportunity to get in and get out. Hopefully that answers that question there. But in other market environments, I might, do it differently. And I think this is the thing that I emphasize a lot on is it's not about, it's not about doing the right thing, but it's about doing the right thing at the right time. And this is why if you ask me a question, my answer will be different. And why? Because market situation. We can make the same decision today and make the same decision tomorrow and get a whole different results. Why? Because market is the variable. And that's where you have to keep in mind is that you're trading the market condition, like pretty much. So your job is to kind of know what works the best in what market environment and trade it accordingly. That's what you're doing. And right now, what we are seeing is a range bound market price action, and that's where you're deciding, okay, what works the best. Now, if this is a directional market, my decision making will be very different. So keep in mind is that every time you're looking at things, you're keeping in mind the market scenario. All right. So Michael says, do you see any off-calendar factors or order flow dynamics that could help push the Euro CAD through the resistance? I mean, let's take a look at Euro CAD. So pound CAD, we looked at Euro CAD. I'm assuming it'd probably be the similar boat here. So here we are. You can see that this is again a good example where prices are stalling. You see, like the last 3 candles, it did push, but then each time it had just come back or pull lower here. So now, what are the market dynamics can really move things? Like I said, sometimes it's the change in the market condition, or sometimes it's a change in with the news events. Now, in the absence of news events, sometimes it's hard to find the catalyst. Like what could potentially move this higher? Like from a trading perspective, people, especially if anybody is trading the range here, this is where traders start to take profits, and that's why we start to see a pullback, and the new money does stop coming in because you're not sure if this is going to break out. So yeah, whenever you get to these points, I think patience is really the key there. That's what I always kind of recommend, that at those points, unless price action will tell you, and this is where you can decide, okay, what does it need to break for me to really get interested? And in this case, I can see right at this level here, if this price start to break up above this, I definitely want to be in. But for that, I won't get in until I get the confirmation. So this is where I like to do the little bit of legwork here and just set some alerts. Just let me know when things are breaking out. When it's going to break out, who knows? What could it break out? Who knows? But after a run like this, you can see that it can consolidate. It can go in a range for a few days before it really breaks out. So this is where we are. I don't really see a whole lot on the horizon. The only thing I would say that can change things, let's just say, we would talk about scenarios. Market seems like it's getting ahead of itself for the rate cut. 3 rate cuts, I seem pretty aggressive for a market that is at all-time highs. It's different if markets are hitting new lows. If things are getting weaker, I expect there's just more support needed. But this is where I think it doesn't make sense. But that's where I think a change can come if the dollar does strengthen, because if the dollar strengthens, then the CAD will strengthen. Or if the dollar really weakens, then CAD will weaken. So I think for that, we need these things to kind of break out of ranges too. But you can see that CAD is still range bound. The dollar is still range bound. I don't really see a reason why I want to jump into that pair. So now realize that CAD is going to be more sensitive to what dollar is going to do. Now, can I enter trades based on fundamentals? And I think this is where, based on what we just kind of witnessed. I mean, Aussie is not really a greatest looking pair or currency right now, but I don't mind taking a look at, see if this is going to break out. But again, same thing. This is range bound. Pound Aussie, I like it from the fundamental perspective, because now the Bank of England is more hawkish, but Bank of RBA is more dovish, right? So you can kind of look at that perspective, but I don't see a confirmation yet. But same thing, set up alert, tell me when it's going to break out. So I think that's really where we are. I think I was looking at Pound Aussie earlier. So this is where I think as we were looking at Pound the Pound CAD, I think Pound Aussie look interesting to me. And this is, again, same scenario that I like it more from a risk to reward perspective. We identify that Pound is looking strong. We identify the Aussie is more range bound. But, I mean, if you look at this pattern here, just a chart pattern, we did break above this resistance here. And if you look from the risk to reward perspective, like it does have a lot of room to run before the prices stall. So I think Pound Aussie looks interesting to me here. From a chart perspective, this is a pattern. We got a high base over here, broke out, did pull back, and here we are back above it. So yeah, this is a one pattern that I did like, but that's just based on risk to reward perspective. But just realize that as you're entering these trades, they might take longer for them to develop, especially when daily ranges looks like this. But you can see that if this is also like this is the Aussie here, these trends are not strong. So as they get towards the resistance, it does pull back, but ranges are pretty small here. But pound Aussie actually do like from a risk to reward perspective. All right, let me know if anything else that you're looking at. I know some questions I had was like Swiss franc, like let me take a look at some of the Swiss franc currency pairs, because this is where we talk about pairing things. They're tightly correlated. So here's the one that I really I find that very interesting, and that's why I wanted to kind of bring it up to your attention if you're paying attention to Euro Swiss franc. Now, when you look at this chart pattern, you can see like this is a strong level of resistance. But I think as you can see that prices are holding around that level. So this is where I will just put another alert that, let me know if this is going to break above this area. Because again, euro looks strong. Swiss franc, slightly weaker. But if there's a divergence that take place, I definitely want to be in on that one. So it's not ready yet. You can see it was a pretty nice run off the support, 92, 75, all the way up to 94. This thing has moved, like 150 pips easily. Now, this thing is mostly going sideways, but I will be paying close attention and see if this breaks out. Same thing, pound Swiss franc. Talk about the relative strong weakness. This thing is also has some room to recover, just like pound Aussie. Here we are with the resistance at about 111.58. So yeah, I think pound against Swiss franc, pound against the Aussie, they actually look a lot better. Even pound against the Kiwi. Let's take a look at that. Well, this thing is also coming against the resistance here. So I'll set up alert on this one as well. So really, as we take a look at it, it all comes down to pound Aussie and pound Swiss franc. Now, let me take a look at some other currency pairs, like we talk about dollar yen. So dollar yen is a good currency that's been moving from a range perspective. You can see that these are big ranges going from 141 all the way to 150. A lot of back and forth. Right here, right now, yeah, it's a lot of choppiness. It doesn't even look good. But this is where I think if it gets above 148.50, 149, it looks better to the upside. If it does break lower than 146.87, perhaps it would start to look a little bit more on the weaker side. But yeah, it's stuck in that little range. So normally I do like dollar yen to pair, but even dollar yen is kind of going a little sideways here. Even dollar CAD, you can see it's also going sideways here. So some of the things that are just stalled over here, that just doesn't look good from any risk to reward perspective. All right, so let's just wrap things up here. Looks like we went through all the questions. Low volatility likely to continue. Like I said, this is seasonality patterns. Market conditions more range bound, and until we really start to see a breakout, look for that volatility to pick up. And as far as the news events, we don't see a whole lot on the horizon. But like I said, pay close attention to the U.S. data. I think that is going to have a more bigger impact on some of the movements. I think that's really where the opportunity is. But this is an environment where I would say trade less. If this was like back early this year, that was a time where you can get opportunities pretty much every single day. Now, we saw some trades. You could take 3 or 4 or 5 days to develop. This is where you don't want to be trading too much. You're not getting too big of a percentage change. You're getting smaller percentage moves. We want to keep your activity down to low as well. This is an environment you don't want to overtrade. Like I said, there's a hope, or there's a light at the end of the tunnel, which is the end of the month as we go into after the Labor Day, and even the jobs report. I think is going to be an important one next coming up as well. There's going to be plenty of movements to be had, but patience is really the key in times when things are looking a little bit more on the quiet side. So that's all for now. Enjoy your rest of the day. Enjoy your summer. Everybody has a couple of weeks. Then after the Labor Day, we kind of go back into the high gear. Things pick up. So enjoy your holidays, or enjoy the summer till that changes. Thanks everyone for joining, and then let me know if you have any questions. Cheers.